Scott, welcome. Nothing at the bottom of the hour in terms of economic data for us to look at, but we do have the JOLTS later today. How much attention should we commit to this one?
You know, it's a big number. It's in and of itself not a standout. However, given the weakness that we've seen in the labor market recently, Ben, any number that comes out should really affect the market. So I do think this will be important, probably more so to see a positive number. If we see a continuing trend, a weakening trend in the labor market, that could spell some trouble.
All right, I like that point. All jobs data releases should be watched very closely. Certainly a focal point for the Fed. They've made that very clear. It should be for us as investors, as traders. Scott, I'd imagine the most active market participants this week will probably going to be keeping a close eye on that CPI number that's scheduled for the Consumer Price Index that we'll be watching for.
Yeah, it's a pretty light week economically. But that is the big number this week. And we talk about this all the time, how the consumer has really held this market, up for the last 6 to 9 months. And we've seen some data recently that maybe things are slowing. So the CPI number will be a big one.
Scott, talk to me in terms of what's playing out here with the rates, TNX or TYX, I should say, spiking up to the 2% level. TNX, the 10-year yield's on the move higher, but not as enthusiastic to the upside. What are you watching here? Should we be concerned? Everybody's talking about a line in the sand. Nobody's really clear where it is, though.
Should we be concerned? We always should be concerned over big moves, big moves that happen in a short period of time. However, we're still at historic lows here. The yield curve is steepening a little bit. That's why we're seeing the 30-year, get a little bit more attention than the 10-year right now, as you just said. But is it overly concerning? I don't think so. This is a good thing. I mean, this is healthy for the market. We obviously don't want to see continued spikes higher because that could really then impact spending. It can really start impacting the market. But I think it's very healthy where we're at right now.
All right, so what does this mean for the U.S. dollar right now? Because, well, it's lost some of the momentum to the downside. Yep. Not necessarily reversing the trend. I don't think one could argue at this point. But, the dollar weakness has been supportive of the commodities and some of the other futures products that we look at here on this show. So it's important for us to kind of keep a close eye on it. I often reference it as the epicenter of many of the moves that we look at. It certainly is at the center of many of the ripple effects that we see. What should we be looking at for the greenback with rates, as we just pointed out, the TYX nearing that 2% level?
Well, I think it's very touch and go for the dollar right now based on all the stimulus talks and what happens with stimulus talks. The dollar is trading now at about a 1-week low. It's off those highs. And, we've seen a little bit of a pullback in yields. And it all really is dependent upon what happens with stimulus. The closer we get to, this positive stimulus talk and maybe a new package actually passing here, that will continue to put a little pressure on the dollar.
Dollar coming off here a little bit this morning, down by about 1/3%. I'm noticing It's the largest decline against the yen that we've seen in 3 months. Right. Scott, in terms of other foreign currencies, are there any others that you're keeping a close eye on? British pound seems to have kind of come off the radar a little bit with the Brexit talks resolving. The euro currency lost some of the momentum we'd seen to the upside, with the dollar losing some of that downside trajectory. What currencies do you have your eye on as we head into the middle of the month of February here?
Well, it's funny that you mentioned the pound because, since all the Brexit talk is kind of behind us and Brexit is behind us, that has come off the radar, but it is strengthening right now. The pound is at its strongest level in almost 3 years against the dollar here. And the euro is rallying a little bit also, even on the heels of some negative news coming out of Germany. But I think that both are rallying because of some positive news about the vaccine. They've been lagging. They're as much as we talk here that our logistics getting the vaccine has been slower than we've wanted. It's been worse in the Eurozone and in the GBP. So we're starting to see that pick up, and we're starting to see both the euro and the GBP rally a little bit. But I'm really focused on the Aussie dollar. The Aussie, New Zealand dollar. New Zealand, I think I said New Zealand, New Zealand dollar. Those have been rallying quite a bit. And, what we're seeing there, is that's an area of the world with low cases in terms of COVID and very strong economic fundamental outlooks here. And we're seeing some strength there in the Aussie and the New Zealand dollar. So that's definitely something to watch, Ben.
Let's get a look at them here, both side by side, just to kind of provide a visual in terms of what Scott was just referencing, the bid activity. I've got the New Zealand dollar on the left. I've got the Australian dollar on the right. Scott, that was a great heads up there. Actually, that flew below my radar in terms of that breakout on the British pound that we're seeing here. Certainly something to keep an eye on. It's been able to get up above a couple key hurdles there as well.
Yep.
That'll be something to watch in terms of the influence it has on the U.S. dollar. Let's talk Bitcoin here on the move, new all-time highs. I have to get your thoughts before we let you get out of here.
Yeah, new all-time highs. Is it going to replace the dollar? Is the standard currency? I mean, that's anyone's guess. I mean, my best guess is to say no. But the news that we got yesterday of Elon Musk buying $1.5 billion. Some people, when I say some people, not really economists, but there's kind of word out there that that's a vote of no confidence, in the dollar. Mm-hmm. And I don't look at it that way, but listen, it's headline news and there's so much FOMO in the market right now, fear of missing out in the crypto market in Bitcoin. Oliver Rennick and I talk about this all the time, Ben, about the relationship between the dollar and Bitcoin. And over time, there has started to become a little bit more of a relationship. But now, again, that excitement and that FOMO over what we're seeing in Bitcoin, I don't know that you can truly relate that to any dollar weakness that we're just seeing right now. But this move is historic, would you say, in Bitcoin? I think it's going to calm down here quite a bit in the near future here, but it's hard to fight that trend.
Yeah, historic, parabolic. There's a couple words you could use for
parabolic is a good one.
Certainly, we did have that dollar chart up. We were talking while you were mentioning that, and Bitcoin's continued higher even as the dollar's lost some of its momentum. Dollar bottomed out around that 89 level in the beginning of January. That certainly coincided with that high that we saw in Bitcoin up around the 42,000 level, but this is probably a more reflection of what Scott was speaking to in terms of the Tesla, the Elon Musk tie to it. I've been calling it the Oprah effect, the Elon Musk effect, Scott. We'll continue to watch this play out here. Appreciate you joining us here to take a look at what's going on here in financial markets as we start the week. Scott Bauer, ladies and gentlemen, the CEO of Prosper Trading Academy.